If you're a first-time homebuyer, you've likely heard about FHA loans, whether from a lender, real estate agent, or even a well-meaning relative who recently bought a house. While FHA loans can be a great option, many people don't fully understand their drawbacks or hidden costs. This guide will break down what an FHA loan is, why it's popular, and when it's the best choice, the major problems with FHA financing, solutions and alternatives. By the end, you'll have a clear understanding of whether an FHA loan is right for you, and how to navigate its challenges. 1. What is an FHA loan? The Federal Housing Administration, FHA, loan is a government-backed mortgage designed to make homeownership more accessible, especially for buyers with lower credit scores or small down payments. Key features of FHA loans: low credit score requirement, minimum 580 for 3.5% down, 500,579 for 10% down. Low down payment, just 3.5% of the purchase price. More flexible debt to income, DTI, ratios, up to 56% in some cases. Lower interest rates, often 0.5% lower than conventional loans. Higher seller concessions, sellers can contribute up to 6% toward closing costs versus 3% with conventional loans. History of FHA loans. Created in 1934 during the Great Depression, FHA loans revolutionized the housing market by introducing long-term mortgages instead of short 3-5-year loans, reducing down payments from 50% plus to just 3.5%, helping veterans and middle-class families buy homes post-World War II. However, FHA loans have had controversial moments, such as redlining in the 1960s-70s, where they denied loans in high-risk, often minority, neighborhoods. 2. The benefits of FHA loans. Why do people recommend them? Easier approval. Great for first-time buyers with lower credit scores or limited savings. Lower upfront costs. Only 3.5% down versus 5.20% for conventional loans. More negotiation power. Sellers can help pay closing costs, up to 6%. Cheaper interest rates. FHA rates are often lower than conventional loans. Example. Home price, $300,000. Down payment, 3.5%, $10,500. Closing costs, 6% seller help, $18,000, can be used for fees or rate buydowns. Monthly payment, lower than conventional due to better rates. 3. The big problems with FHA loans, and how to fix them. Problem number 1. Permanent mortgage insurance, MIP. The issues is upfront MIP, 1.75% of the loan amount, added to your mortgage. Example. On a $300,000 loan, that's $5,250 extra you owe. Monthly MIP, 0.55% annually, paid forever unless you refinance. Unlike conventional loans, where PMI drops at 20% equity, FHA MIP stays for life unless you put 10% plus down at purchase, then MIP lasts 11 years. You refinance to a conventional loan later. Here is the solution for it. Plan to refinance once you hit 20% equity. If possible, save for a 10% down payment to shorten MIP duration. Problem number 2. Strict property requirements. Issue in it is, FHA loans require homes to meet strict safety and livability standards. Appraisers will flag peeling paint, especially in homes built before 1978. Roof issues, must have 2+ years of life left. Broken windows, faulty HVAC, or safety hazards. This means you can't buy fixer-uppers easily with FHA. Sellers may prefer conventional buyers, who face fewer restrictions. The solution for this issue is, consider an FHA 203K loan, allows repairs, but complicated. Look for turnkey homes in good condition. If you want a fixer-upper, save for a conventional loan instead. Problem number 3. Seller and agent bias against FHA buyers. The next issue you may face is, many sellers assume FHA buyers are riskier because They have lower credit scores, even if they're well qualified. The appraisal process is stricter, which can delay, clog deals. In a competitive market, sellers may choose conventional buyers even if your offer is stronger. The solution for it is: get pre-approved by a strong lender, not just pre-qualified. Write a personal letter to the seller explaining why you love the home. Offer slightly more earnest money to show commitment. Explain that you chose FHA for the lower rate, not because you're risky. 4. When should you use an FHA loan? The best thing for it is first-time buyers with limited savings or lower credit scores. Buyers who plan to refinance later, once they build equity. Purchasing a move-in ready home, not a fixer-upper. You should avoid if you can qualify for conventional, better long-term savings. You want to buy a distressed property. You don't want permanent mortgage insurance. 5. Final thoughts: FHA loans are a great tool, but they come with trade-offs. If you understand the costs and restrictions, you can make an informed decision. Key takeaways: FHA equals easier approval but higher long-term costs. MIP is permanent unless you refinance. Sellers may prefer conventional buyers. Best for buyers who need low down payments and flexible credit. Next steps: compare FHA versus conventional loans with your lender. Check if you qualify for down payment assistance programs. If using FHA, plan to refinance later to drop MIP.